Okay, welcome everybody to Wall Street Reporter's next super stock live stream, July 15th. We are back with one of our top performing stocks of the past, 12 months. Peak Fintech, Johnson Joseph, the CEO. Johnson, welcome back.
Thanks, Jack. It's good to be back. Did you miss me?
I miss you, the investors.
It's been a while, huh?
It's been about 5 months, I think, right? Because you have to go quiet once you started the financing.
Yes. Yeah, the prospectus financing. Yes.
And I think it's important for investors to understand the reason why they haven't seen you in since, I don't know, February, I think it was, is because you can't really promote the stock, with this Canadian rules. So you had to be quiet. There was no news. Right. And I think also that's probably one of the reasons why the stock kind of dropped off, because you had to be quiet. You had short sellers, but again, you start off at 35 cents last September. The recent high was $3. We've had a bit of a pullback. So actually, the stock has held up very well, considering with the market, there's been a massive correction in microcaps, and your hands were basically tied for 6 months.
And we've been quiet for 3 months, for a whole quarter. That's right. Yeah.
But now, okay, so we're going to get into a couple of things. One is you just closed an amazing financing, $52 million Canadian. I guess the main question is, how are you going to deploy? It's a lot of cash for microcaps. I guess the question is, how are you going to deploy that cash, and which is going to further maximize shareholder value? And again, because our audience, they would know is, okay, the stock, what is, $2 now? What's the path for it to get to $20, $30? What needs to happen? So let's open up with that question first.
Okay, first of all, yes, that was a very, very obviously important financing for us. Now, before I get into it, I want to take the opportunity to thank the folks at Research Capital, who did an amazing job. Some of our brokers who've supported us in the past. Also, shout out to Diana, Tamer, to Jason, Dawn, Sheldon, everybody else. I know I'm missing a few people, but
it was like the Academy Awards here.
Listen, we could not have done it without some of these people that have been supporters of the company. So really, really appreciate it. Now, that being said, the $50 million will definitely go to good use. Now, what it allows us to do is it allows us to make certain commitments that we weren't sure if we were going to be able to make with our partners, with business development, all kinds of opportunities that we had, that we have in China, right? So we had a range of between 20 to $50 million that we said we were going to raise. And obviously, had we raised $20 million, it would have been different. We would have had to make certain adjustments. But now that we have raised the full $50 million, it allows us to make the commitments, and it gives us pretty much all of the capital that we need in order to achieve all of our short-term objectives. Now, one thing I should mention about that is it allows us also to finalize our forecast, right? So I know that the market has been waiting for weeks, for months, to see our forecast. What are we expecting for the end of the year, for potentially next year in terms of revenue, profits? Well, they won't have to wait much longer, because we've crunched the numbers. We like what we're seeing, and we're going to be publishing our forecast next Tuesday. So stay tuned for that. In terms of commitment, business development, what it allows us to do also, we put out a press release. I think it was last week or a couple of weeks ago. I can't remember exactly. Things are moving so fast with the transactions that we did on our ecosystem, the flow of funds, settling payments, transferring funds through the relationship that we have with Wrong Bank Technology, which is a subsidiary of China UnionPay. Now, I can't stress how important that ability is for us. Now, we said in that news release that we had, I think we'd facilitated 1,200 transactions, a little bit more than 1,200 transactions for the month of June alone. That was really the first month in which the services were implemented. It's not just the services themselves, but it's the number of businesses, the quality of businesses that we've been able to attract ever since we implemented that feature. It brings a lot of credibility to the platform. There are bigger players now looking at us. All small businesses are continuing to open those virtual accounts. So expect to hear more news about that in the next weeks or so.
Okay. You know what I think we should do, because we're going to have a lot of new people, and again, people haven't seen you in like almost 6 months. I think what we should do is just give a quick snapshot of what does Peak Fintech do in the basically in the fintech space in China. And I think just one thing I just want to add is that with $52 million, I mean, basically you're essentially, this is like a NASDAQ scale business. This is not like a CSE. This is like you're prime ready for NASDAQ.
Yes, that's a good point. That we'll address that in a minute here. Or pending migration, call it that, to the NASDAQ. We fit all of the criteria to be listed on NASDAQ. It's just a matter of administrative procedure right now, and I'll get into that in a minute. But just to address your first, I guess your first request about an overview of what Peak Fintech Group does is what we do is we automate the commercial lending process in China. So what that means is that we've built a business ecosystem where we invite small, medium-sized micro businesses to come be a part of this ecosystem. They give us access to their data, and we invite lending financial institutions to be part of the ecosystem as well. They enter the lending criteria, and essentially we use analytics, artificial intelligence to match the lenders with the borrowers, and we facilitate lending transactions between the two parties. So in a nutshell, that's what we do. And again, for those who are not too familiar with the company, we started out in 2018, generated $1.6 million in revenue, scaled that up. The following year, we had 11.7 million in revenue. 2020, we had 42 million in revenue. And like I said earlier, we're forecasting.
Johnson?
Yeah, sorry.
We lost you. Okay, this is okay.
Am I back?
You're back. Okay, so basically, so you were saying, okay, so you were talking about how fast the company has been scaling, and I think so. You did 40 million plus last year, 2020.
2020. That's
the most recent quarter, you did 15 million plus Canadian.
We did 15 million, yes.
Okay.
In the first quarter of this year. So second quarter numbers are due out end of August, if I'm not mistaken. So we're planning on continuing on that growth path for the foreseeable future. Again, I don't want to steal the I guess the
okay.
What's the term here?
The surprise, whatever. Give us the
term. So we'll see next Tuesday when we file our guidance.
But you could be. I mean, is it safe to say that you could do 100 million run rate in this year, 21? Because you're basically at 60 million now.
The run rate.
Yeah.
Yeah. Listen, I'm not gonna comment on that, Jack, if you don't mind. So it's only a few days away. It's less than a week away now. So next Tuesday, the numbers will be out.
Okay. Let me throw out a comment. So basically, if you're doing 100 million run rate, right? And you got 50 million cash. I mean, basically, this is a NASDAQ style company. You should have a NASDAQ style valuation, 10x, 20x revenue. So that's a billion valuation.
The only thing I can say about that, Jack, is that we're not on NASDAQ yet. So again, that's one of the reasons why we want to graduate to that larger exchange, make sure that more and more people are aware of the company. We will also have an outreach program to make sure that more investors. Yes, we're here on Wall Street Reporter. Great program, by the way. We get a lot of comments and positive feedback every time I appear on the show, so I appreciate that. But we're going to be reaching out to a broader audiences in the U.S.
Beyond the Wall Street Reporter, who could there be on the Wall Street Reporter?
You're right. Like, I mean, yes.
Goldman Sachs. I mean, I don't know, whatever other institutions. Listen, Johnson. So basically, if you do basically the stock would be a 3x just if you get a very minimal 10x multiple.
Again, I'm not going to comment on that. Like,
I'm just saying. It's not you saying. I'm just throwing an opinion, which is like, everybody knows that's what these stocks trade at 10x. So the stock should be, there's an easy path to $10 is what I'm saying. Of course, this is not, investment advice, all that other disclaimer. But okay, so you got some very, I think we should talk about. Give us some real examples of how your clients are using it. You had that, the 618 festival, you got different partners. How are your customers using it? In other words, how are they using kind of this lending facility that you're connecting them with banks? Give us some examples, some real examples.
You know what? Like, I mean, Yeah, so we call it a lending hub, but more and more, Jack, what we're seeing is because we allow businesses to I guess do business within with themselves as part of this ecosystem. So it's more of a it's becoming more of a business hub than just a lending hub. We're facilitating more than just lending, right? We get fees when transactions are done, when lending transactions occur between the small businesses and the lending institutions. But going back on what you were saying about 618, we learned a lot from 618. That was our first participation in the event. There was a lot of preparation that went into it. But just to give you an example, we have distributors. JD.com is, they actually started 618, right? So they invented the whole thing. Now we have all of these other platforms that are participating in the event, but we have clients who sell to JD.com, right? So as JD.com sales ramp up, right? So JD.com needs to, they reach out to these suppliers for more product, blah, blah, and stuff like that. And these suppliers, they have to turn around and get that from factories and stuff. And there's a, how can I put this? There's a cash flow issue, right? So this is where we come in, so the demand from 618 is growing up. People are going up. So consumers are buying products, and there's a demand from JD.com on these suppliers, and these suppliers basically have to source material. They have to source products from the factories, and oftentimes they need cash. They have a cash flow problem, right? So we came in, we helped them plan for that. So there are planning sessions in terms of what was expected, in terms of demand for the products on JD.com, and we helped them basically quickly facilitate the funding that they needed in order for them to take full advantage of the event. So again, this was our first year, very, very successful. We plan on being more active in the future. So not just on 618, but there's a bigger event called Singles Day happening in November. So we're going to be working with our partners on that.
They get a lot of these holidays, which are very commercially oriented in China, where people come up with these. It's amazing. So so basically, bottom line is what you're doing is you're helping these online sellers get the financing they need so that they can buy inventory and sell.
It's not just, but the thing, it's not just online sellers, right? It's businesses, whether they're online, whether they're in the real world. And, yeah, exactly. It doesn't matter what industry either, right? Like, I mean, it could be retail. It could be retail. It could be restaurants. It could be, I don't know, like people trading in petroleum products. It doesn't matter to us. If you are a business and you have cash flow issues or whatever, and that's a common problem in China, okay? Because some companies will pay 90 days, 120 days. And if you're in a relationship where you're dealing with a larger company, that larger company gives you terms that affects your cash flow, then you have a cash flow problem, right? So this is where we come in. We solve.
I didn't know that. Is it in China? Is it typically that companies pay late, to pay their vendors?
Oh yes. Like, I mean, yeah, big companies, when you're doing business with them, they hold the bigger end of the stick, the stick, right? So they can decide to pay you in 120 days. Sometimes it takes can take like 3-4 months. Sometimes,
and that's where you come in. So basically, they need you to give them. So it's an essential part of the economic fabric.
Absolutely. And all fairness, this is not just a problem in China, Jack. And that's why
everybody has the same
exactly
issue.
Right. So that's why we have plans on coming to North America and replicating the concept here. In fact, it's already being done to a certain extent by Kubler here in Canada, and there's an expected transaction that should take place between Peak and Kubler, whereby Peak will acquire Kubler, and then that will allow us, Peak, to come to North America, to Canada first, and then eventually in the US. So we have plans to be in North America with a similar service by the end of this year.
Oh, okay. That's an interesting catalyst. So in North America by the end of 21.
Absolutely, yes.
And when you say North America, are you including the U.S. in there?
Yes.
Okay.
So first we would launch in Canada, and shortly thereafter, maybe a couple of months after, we would be in the US. So that's the plan, yeah. And by the way, you see, we're helping through events like 618, and just as a regular, I guess, service that we provide to businesses. We allow them to, again, get funding and also to do business with each other, right? As I mentioned before, it's becoming more of a business hub than just a lending hub. Now, JD.com, I mean, JD sells, retailers from all over the world sell on JD.com. Well, not so much all over the world, but more and more now, JD has a program where they allow foreign retailers to open storefronts and sell on JD.com. Now, with the financing services that we offer, the network of influencers that we have in China that are already working with us, we also believe that this would be a great opportunity for us to allow North American businesses, retailers here in Canada and in the US, to be part of the, I guess, the business hub, let's call it that, to join the business hub here in North America and be able to sell their products to a Chinese audience. So this is something that we'll be working on over the next few months as well.
Okay, I want to talk about this. You started doing something which is pretty interesting. We talked about back, I think, in January, which is the program you have where you're financing essentially the inventory for these influencers on social media. In China, basically they sell, which is, it's becoming such a huge business. In the US, we don't have it yet, or outside of China, but where essentially they're selling, goods on sort of like a QVC in the US. Absolutely. It's massive. Can you talk about how that's going? Because that's a very interesting business there.
Yes, that's another side of our operations. As I mentioned before, we're not limited to any type of business, any industry, right? So these influencers are becoming a force. Not becoming, they already are a force in the retail world in China. So a lot of products get sold through these showcase events that they put together. They have these events on apps like WeChat, Weibo, TikTok now. So they have these shows where they showcase products. Like you said, it's QVC, like, a home shopping network or whatever. So they're very clever in the way they do it. They have these skits sometimes that they put together and stuff. So they showcase the products, and they have a ton of influencers. They have millions of influencers. So when they showcase a product, then typically their influencers will start to order the product, and they're becoming a force. So what we're doing is these influencers, like I said, they put elaborate shows, right? So these shows, there's a cost to putting these shows together.
They got to have inventory. They need like $100 grand of inventory, or whatever they need, right?
They will either need inventory or they need funding in order to put these shows together. Okay, like I said, these shows, these are professionals, Jack. This is not like, this is not just like, one person, hey, you know what, like I have this new phone or whatever I want. No, like, I mean, they have cameras, lighting, everything and stuff like that. Like I said, they sometimes have like, it's like putting together a little play or a little mini movie,
like where a Bollywood production,
yeah, where they showcase the products. It's very, very interesting.
Right.
And it takes money to do that, so they use humor, they use all these different things and stuff like that. So it's almost like the followers don't feel like they're being sold a product. You know what I mean? So they're just seeing the product in the context of the event that they're watching, and it's a very, very effective way for them to push product. And they will need funding to put the shows together or whatever. So we help in that aspect as well.
Yeah. Somebody was just saying this. We have, they have, classes. There's a whole, it's a whole industry. It's really taking
it's
crazy thing. But this, again, that's a tiny part. That's just really a tiny part of what you're doing. I mean, like, let's talk about some of the big partnerships that you have. You mentioned JD. I think you have like several of these huge partnerships with what's the other company there that does the food products? I think there was a couple of other big partners.
Yeah, we have a lot of distributors who have access to who have exclusive access to either brands, or they have exclusive access to certain stores like, PetroChina, convenience stores across the country. So yes, we have some very significant partnerships. ShopEX, we mentioned these online stores, right? So a lot of them use ShopEX as their management, like accounting or store management application. So partnerships with ShopEX, we already mentioned the partnership with Rongbang, who is a subsidiary of China UnionPay. So what the audience can expect to hear going forward, Jack, is, again, we didn't have the funding, or we weren't sure about the funding to make certain commitments, but now that we have the funding, so you're going to be hearing a lot about what we're doing with these partners, ShopEX, Rongbang, or UnionPay, BJM, the distributors. So there's going to be a lot of news coming up in the next few weeks. I think the market and the audience is going to be sick of hearing from us.
Okay. So the news flow is finally going to start again.
We were quiet for 3 months, but I would say over the next probably like through the end of September. This is how far we can see so far, but like through the end of September, there's going to be news coming out every week, sometimes twice a week. There are a lot of things that are happening right now that we're very excited about, that we're going to be sharing with the audience and the market. Yeah.
Okay. So the bottom line is going to be a lot of catalysts for the stock to move. Not that this is about the stock, but but there's going to be a lot of catalysts. One thing which I think is very interesting too, somebody was asking about the default rates and things like that on the lending, but I think one of the key things which is going to tie into that is what differentiates Peak Fintech from like other people. There's other companies doing similar things, right, at various levels, right? So, obviously you're generating some significant numbers, which validates that the model is working, right? You're doing 60 million run rate, 100, could be 100 million, I don't know yet, but so what differentiates Peak Fintech, and so how big is your moat, and maybe that possibly ties into these low default rates that you're doing? Like what makes you unique?
Okay, that's a very good question, and that ties into some questions that we've seen people ask about what's happening in China right now with technology companies and individuals, privacy, blah blah, and all that stuff. So what makes us different is really the fact that when you look at lending in general, the focus has always been on the consumer side. Okay, so a lot of platforms focus on consumers, right? So they do consumer lending, and that's one of the reasons why the government has been cracking down. A lot of consumers were getting easy access to credit that they perhaps normally would not have qualified for, right? So what happened was that they ended up in debt, and there's been some tragic stories about people doing tragic things when they couldn't pay back the money that they had borrowed or whatever. So the government started to crack down on that. All of these institutions were lending to consumers and creating this huge problem. So the government stepped in and said, okay, you know what, we need to pull back here and take a look at what's happening in this industry. So the number one thing that sets us apart is that we are not a consumer-based platform at all. Our entire focus is B2B. We help businesses get funding, and we help businesses do business with each other. That's what our ecosystem is about. It's really a business-to-business ecosystem, right? So that's the number one thing. So we talk. There's been stories about, for example, DD, right? The ride-sharing service. Recently, I think they went public in the U.S. on the New York Stock Exchange, if I'm not mistaken. And shortly thereafter, the government had their app pulled from app stores in China. And people are trying to draw a parallel between us and companies like that. They're also a technology company, but the reason why the government did that was, for our understanding, is for personal privacy issues. Now, some of these applications, again, this is a consumer app, a consumer service. So what they're doing is they are collecting data, personal data, sometimes personal private data, sometimes, well, according to couple of things that I've read. Perhaps the users, when they downloaded the app, were not fully aware of all of the information that was being accumulated. So again, the government stepped in to protect the privacy of consumers, right? So again, we're not in that space at all. So there should be no parallels drawn between us and companies, tech companies who deal with the consumer market. That's not our market. Okay. The other thing,
and also, I think the other thing is, the whole thing in China. It's there's a very sensitive political situation there, and like we've had companies that like Alibaba ran into problems. So you're basically walking a very clear line. You're just sticking
correct.
to the business. You're not getting involved in politics.
And the other thing, Jack, I want to mention is like, I mean, all of these things, all of these regulations are actually working in our favor. Like, I mean, listen, in all like transparency, the government has looked into our operations in China. They're obviously aware of what we're doing. So we've done deals. Well, that's the term. Partnerships. We've worked with municipal governments, provincial governments, even the federal government is aware of what we're doing. So to have a partnership, for example, to have a partnership with Rongbang Technology, which is a subsidiary of China UnionPay, which is a state-owned, government-owned entity. So they would not have allowed this to happen had they not already looked into our operations to see what we're doing and understand clearly what it is that we're doing. So again, I think all of these regulations are actually working in our favor because we are helping businesses and we're not dealing at all in consumer data. So to answer your question, Jack, that's what really makes us stand out, is the fact that we're focused entirely on B2B, and we are a lending aggregator. We're not a lender. Like, we have one subsidiary that makes loans itself, but that's just a small fraction of our revenue. Most of our revenue comes from the lending activity that comes from other lenders who are using our platform, using our application to make loans.
So I mean, basically, you connect the businesses, the borrowers, with the banks. You're not involved with financing the transactions yourself.
Correct.
I think when you originally were starting the model, you were doing that in a small scale just to prove it. So you're not.
Correct.
That's correct. That you're not. That's not.
And that will get us into the lending default rates, right? Like, I mean, one of the reasons one of the reasons why lenders are buying into to our ecosystem concept is because we have proven that using our system, using our technology, that they can expect to significantly decrease their default rates. So COVID-19, it wasn't so much defaults, but if you look at our financial statements pre-COVID-19, the default rate was negligible, pretty much non-existent. Okay, for our own lending institution, which again, it's a small portion of our revenue, and for the lenders who use our system as well. Now, after COVID-19, obviously, like, I mean, that caught a lot of businesses off guard, right? So their ability to generate cash flow was impacted. So naturally, the businesses need a little bit more time in order to be able to pay back the loans that they had already contracted, right? So so the default rates went up, and our credit, I guess the allocation for bad debt in our financial statement went up as a consequence of that. But in terms of actual default, there has been the actual loan default rate still remains the same. Now, again, loans are being paid back later. They're taking more time, basically, instead of 30 days, 90 days, 120 days. Well, instead of 30 days, the repayment has increased because they don't, it's taking them more time because of COVID-19 to generate the cash. But the borrowers are still repaying back the loans. So those are the reasons why lenders are using our ecosystem concept to make more and more loans to business.
And just to figure out, the business model is, how do you make money? You make money as a percentage of the loan, or you get, or the transaction? How does
technically it's a service fee, because again, we regulations, right? Like, I mean, we're not a lender. We don't want to be regulated as a lender. So we're not charging interest, right? So the lenders are charging their interest. They're earning the interest. We charge a fee. We charge a service fee, essentially. So that's what you can call it. But the service fee, it can be pegged to the I guess the value of the loans that are facilitated. Yeah, you can put it that way, but it's a service.
Okay. So basically, you make more money, on a $100,000 deal than a $10,000.
Than a $10,000, yes.
Proportion.
Correct. Yes.
10 times as much. Okay. So, question here. Okay, I think we should let's open up for some questions. I think so hopefully we can answer some audience questions. Can you give us an update on the adoption rate from all the deals signed in the last 6 months? Is the rate growing? I think he's asking, are people borrowing more once they sign up?
I think that question is related more to the deals that we signed with the large distributors, the potential to add. I think by the end of December, we had signed deals to add a potential 350,000 plus small business to our ecosystem, and then plus there's the deal with ShopEX, who's got like millions of users. So yeah, the adoption rate is going well. What I will say about that is we expect to reach a milestone in terms of number of businesses that are part of this ecosystem. So that will be one of the news releases that the audience can expect to see from us. So that will give a clear indication as to what the adoption rate has been over the last 3 to 4 months or so. Okay.
Let's see here. Question. Recent news states $300 million transactions came in. Peak receipts of 1.5%. That's, I guess, your commission. Could you please comment on how much revenue Peak received for this? Is one? Okay.
I think this is related to the fund transfer services that we implemented, payment settlement. You know what? Like the answer to that, I don't want to get too specific for this reason. A lot of our partners and clients, believe it or not, some larger clients have started to read our news releases, and they're following the company like out of China. They're in China, but they're following. So we have been advised to not to disclose the fees that we're earning on certain services that we provide. So all I can say to that is, listen, if you want to know about the company's revenue or ability, how fast we're growing, that will be answered in the forecast that we're going to be putting out next week. So that will give you an indication in terms of our ability to earn revenue going forward.
Okay. A couple of people are asking a variation on the question of, how certain are you that Cubular deal is going to be closed, and when is it going to be closed? So that's the variations of that question.
Okay, yeah. So obviously, I mean, if I'm talking about expansion to North America, that implies that there is a transaction between Peak and Cubular. So the two companies are somewhat related, so to speak. So the negotiations are on friendly terms right now. So the anticipation is that there will be a transaction between Peak and Cubular before the end of, I don't know if it's going to be before the end of the summer, but certainly we expect it to be done soon enough that will allow us to deploy Cubular or Peak, whatever you want to call it, in North America by the end of this year. Okay.
People are asking about Pinduoduo. Update on what's happening there.
Okay, listen, Pinduoduo is similar. It's a platform similar to Alibaba, to JD.com. Now, specifically about Pinduoduo, it's, you know what, I can't say too much about Pinduoduo because the government is looking at data companies who accumulate a massive amount of data. I can't talk about Pinduoduo's business right now. So if I talk about our relationship or what we're looking to do with Pinduoduo, then I would be talking about Pinduoduo. And unfortunately, I cannot do that right now for the time being.
Okay. Can you provide more insight on the higher margin products? Is the recent capital raise meant to fund the scaling of those product offerings? So
that's an excellent. That's an excellent question. Yes, absolutely. One of the things that I've been talking about is yes, you know, we started off providing supply chain services in the city of Jiangyin in the province of Jiangsu, and that was more of a client acquisition strategy for us. low profit margins, but we had fully expected that those transactions would lead us to more profitable transactions. And also the fact that Gold River has been taking over a lot of the bundle services that we're offering in addition to supply chain clients. So those two things are combining to lead us to transactions that are more profitable. So again, evidence of that will be shown in the forecast that we're going to be putting out next week. But yes, definitely the company is doing more profitable transactions. In fact, I'll say it again. I've said it before. We expect to have a net profit this year in 2021. Okay,
net profit. So Peak will show a net profit 2020 this year, 21.
Correct. Yes.
Okay. So far you've exceeded expectations with projections and everything. So this is a positive. Question here. What did I miss here? Somebody's asking. Okay, so we talked about global expansion. You're in China. Are you planning to do anything in India?
You know what? Like for the time being, our focus is listen. There's so much opportunity in China. We're just starting to scratch the surface. Like I mean, it's a huge market. You know, so we plan on focusing on China first, then looking at North America, and after North America, our plans call for Europe. So India is not on our radar screen, so to speak, yet. So in chronological order, let's call it, it would be focus on China, coming to Canada, US, and then eventually Europe. After that, then again, assuming there is a deal, a transaction between Peak and Kubler that basically opens the entire global market to us, we'll look at other markets as well. And yes, certainly India. Listen, where there are businesses need for funding, then we will be there. Just think of.
I mean, you have plenty. I mean, just with China alone, it's not like you're going to run out of. I mean,
it's not about
right.
running. It's not about running out of opportunities. But again, you think of just the concept of a network, right? Because this is what Peak is. I mean, the lending hub, which I think eventually is going to be called the business hub. This is we want to build this as an international network. So if you're going to be a network, think Facebook, whatever, Twitter, whatever, there are no borders, right? So we have that same vision. Now, the lending activity itself will be limited or by jurisdiction, right? Because you have different rules in different countries for banking, for financial services and stuff like that. So that part of the ecosystem will have to remain by jurisdiction. But as far as connecting businesses with each other, networking, that kind of stuff, there are no borders. So we are planning on implementing this ecosystem concept in different parts of the world, and eventually connecting all of these businesses, if they can do business with each other, network from country to country.
And would you get a percent? So in other words, basically, it's going to be a trading platform for these businesses. So, a guy has, I don't know, a container of, I don't know, bottled water or whatever it is. You connect them with a buyer, and you get a percentage of the transaction.
And they need funding. We help with the funding. So again, this is. Hey, listen, we're looking at building a business hub, an international business hub. That's where we're going with this thing. That's
actually very interesting, because so you're developing these customer relationships. You're giving them the financing now. There's a lot of similar. So essentially, it makes sense to have that thing where you connect them. It's sort of like think of it almost like an eBay for business, buying and selling whatever it is that they need.
There are all kinds of different ways you can look at this, but essentially, yes. Listen, if you are a business and you're looking to do business with other businesses, then be part of the ecosystem, essentially.
Okay, I think we're gonna have I think we're gonna have time for just one or two more questions, and then we're gonna have to have you back in about a week or so, 2 weeks, because there's gonna be a ton of questions.
I'd love to come back after the forecast comes out.
After the forecast, okay, let's do that, because it's been so long. It's like, okay, what some people are asking. Okay, so in terms of NASDAQ, is there going to be a share consolidation? Are you going to do a reverse split?
For the, yeah, you know what? I know the consolidation. Well, not all people, but like I mean, for some people, they see the word consolidation and it scares them. But in our case, we believe that the consolidation is going to be a very positive thing. Now, that ties into our NASDAQ uplist, right? I think I've mentioned in the past that we've checked off all the boxes as far as qualifying for the NASDAQ. Yes, it's still under review right now. The last remaining criteria for us is the minimum stock price, right? So the minimum stock price will require us to do a consolidation. Now, we had a shareholders meeting back in February where we approved a consolidation of up to 5-to-1, but in all likelihood, the consolidation will likely be limited to 2-for-1. And that should be enough, we believe, to help us to qualify for the NASDAQ. Again, it's not finalized yet, but that's what it's shaping up to be. So you can expect to receive news on the consolidation ratio in the coming days. Okay, days or weeks. So with that consolidation news, then once the consolidation takes effect, then it's probably going to be a matter of a couple of weeks before we finalize the NASDAQ application and we're listed on NASDAQ.
I mean, but you know, like the stock. I mean, the stock was, again, it was recently $3. Let's say the stock goes to $5. Would you do a consolidation then or no?
If it goes to $5, listen.
So again, yeah, I mean, it's not a big. I mean, it's not a big deal for the stock to be at $5 right now. I mean, it should be based on the fundamentals.
You know what? Unless you know something, I haven't looked at the stock today. I don't know what it's trading at right now. I'm focused on business.
Right. Well, it's in the $2. I mean, well, you know, it's been stuck in this $2 range.
Whatever it is, I think the consolidation, Jack, is going to not just for the NASDAQ. Yes, the primary reason why we would do it is basically to qualify for the NASDAQ. But in terms of number of shares in circulation, there are many benefits for us to consolidate the stock. So I think we'll look at doing a 2-for-1 consolidation no matter what. Institutional investors, once we're in the NASDAQ, institutional investors look at the number of shares that you have in circulation. And if we're to do a 2-for-1 consolidation, we would be kind of like in that sweet spot. This is what our advisors are telling us. So there are a number of reasons for why we think a 2-for-1 consolidation would make sense.
Okay. Johnson, I think on that note, let's leave people hungry for the next live stream, probably next week or within the next 10 days. Let's just plan that out. We'll have a ton. We'll get a ton of questions. We just ran out of time.
Okay, perhaps yeah. We'll leave more time for questions next time.
Johnson, thank you again, and we'll catch up with you in about 10 days.
All right, sounds good.
Hopefully, there'll be even more news by then.
There should be. All right, thanks, Jack. Okay.